In today's market update, we're going to be taking a quick look at four instruments: the SPX or S&P 500, the NDX or Nasdaq, and also gold and Bitcoin. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. Let's start with the S&P 500, and you will know from last week's market update that we are considering the magnitude of this cycle trough that formed at the end of October. You can see that according to this analysis, that trough has been phased as a trough of the 80-day cycle, and the 40-week cycle trough was positioned over here either in July or in August. However, as discussed in last week's market update, it is also possible that this trough that formed at the end of October is of greater magnitude than 80 days. In other words, it could possibly be the 40-week cycle trough that formed then at the end of October. So what does that mean to us as people who are trading this market? What it means would depend very much on what trading approach you are using to trading on the basis of a Hurst cycles analysis, and also, of course, on the time frame that you are trading. If you are only interested in trades that are of greater than 18-month magnitude, perhaps you might be a longer-term investor as opposed to a shorter-term trader, then you would have a different approach to the person who is looking at entering into a trade and holding on to that trade for several weeks, or perhaps even only a few days. For the purpose of these market update videos, I tend to focus on this 20-day cycle FLD, because that is, in my opinion, a very useful tool to track and monitor trades that will tend to last from about a week to about 3 weeks in duration. I should remind you that this is only one trading strategy that can be taken on the basis of Hurst cycles, and this strategy is based upon the sequence of interactions between price and this FLD. The FLD is an acronym that stands for Future Line of Demarcation. It is one of the tools that Hurst discovered in the late 1960s and published in his work at that time and in the early 1970s. Now, the way that we actually trade the FLD is not something that Hurst himself discussed. He discussed various attributes of the FLD, which I won't go into here, but the way that we trade this FLD is based on a sequence of interactions that I observed when I started trading the FLD many years ago, and I observed that sometimes price crosses that FLD and sometimes it finds support or resistance at the level of the FLD. It does so in a regular sequence, and so following a trough of at least 80-day magnitude. And this is where the question of whether this is an 80-day cycle trough or a 40-week cycle trough becomes moot. Because if this was only an 80-day cycle trough, or if it was a much greater cycle magnitude, we would follow the same sequence of trades based upon the interaction between price and the FLD. In this case, as price crossed above the FLD, that was our A category interaction. As a matter of interest, the future line of demarcation, by definition, is plotted into the future, and so it is presented on your chart, as you can see, several days or bars into the future, and so you are aware of where the FLD is at in terms of its level into the future. A target was generated as a result of price crossing above the FLD over here in the first few days of November. That target was 43.55, and so that target was reached, and I discussed that last week. The next interaction between price and the FLD is labeled a B and C category interaction pair. B is the process by which price comes down towards the FLD, and the C category interaction is where price moves up and away from the FLD. The B and C category interaction pair is where we expect price to find support at the level of the FLD, and it should do that at about the time of the 20-day cycle trough. And so that is the interaction that we are expecting to form now. The 20-day cycle trough, you can see from this nest of lows, was expected pretty much over the weekend, perhaps today or into the first few days of this week. At the time that that 20-day cycle trough forms, we would expect price price to find support at the level of the 20-day FLD. Now you can see that price came down to a low point on Friday of last week. Is it possible that that is the 20-day cycle trough? If we measure the number of days that elapsed from the trough at the end of October until Friday, you can see there were 14 days. The average length of a 20-day cycle discovered by Hurst 50 years ago was 17 days. And so it is certainly possible that the 20-day cycle trough did form on Friday of last week. Now you will notice that on Friday, when that potential trough formed, price was above the 20-day FLD. What does that tell us? It tells us that there is a good deal of bullishness in this market. Of course, you don't need to be an advanced Hurst cycles analyst to see that for yourself, but that bullishness does certainly increase the chances that this trough that formed at the end of October was of greater magnitude than the 80-day cycle that has been phased in this analysis. And so what are we expecting next? We are, of course, expecting price to bounce up out of the 20-day cycle trough, which possibly formed on Friday. It is going to move up, and then it needs to come down and form a 40-day cycle trough over here towards the end of November. As it comes down to form this 40-day cycle trough, we would expect it to cross back down below the 20-day FLD. Usually, we would expect that target to the downside to be accurately achieved, and then for price to bounce up again from the 40-day cycle trough. But if there is a good deal of bullishness in this market, it is also possible that price will fail to actually cross below the 20-day FLD, but will find support at the level of that FLD at the time of the 40-day cycle trough. But I'm getting ahead of myself. We don't know that yet. We need to take this price action bar by bar and monitor what is happening. Our expectation on the basis of the Hurst cycles analysis is well presented by the composite model line. This is a tool in Sentient Trader software which takes all of the information contained in the cycle analysis, recomposes it, and presents this line based on the assumption that these cycles are going to keep beating with the same wavelengths and same amplitudes. Here you can see the expectation of the cycle analysis that price will form a 20-day cycle trough at about the level of the 20-day cycle FLD. We are going to rise up to another peak, and then price is expected to move down into the 40-day cycle trough, as I have already explained. Taking a look at NDX, or the Nasdaq, I'm not showing the longer term picture here because the situation in terms of the analysis is exactly the same as it is for the S&P 500. And so we have an 80-day cycle trough that formed over here on the 26th of October. And again, there is a discussion to be had about the magnitude of that cycle trough. It might be a greater magnitude cycle trough that formed at the end of October. Here we have the 20-day FLD, and price again crossed above that FLD in our A category interaction, generating a target to the upside, which was met at the end of the week before. And again, we have the situation where the 20-day cycle FLD is expected to provide support at the time that the 20-day cycle trough forms. That 20-day cycle trough was expected, as can be seen from this nest of lows, over the past weekend, or perhaps today or tomorrow. Again, there is the distinct possibility that that 20-day cycle trough formed on Friday, and that the strong move upwards on Friday was price bouncing out of that 20-day cycle trough. Here is the composite model line, which again indicates that price is expected to reach up to another peak, and then it is expected to move down into the 40-day cycle trough, again expected at the end of November. Interestingly, this composite model line in the Nasdaq is a little more bullish than it was in the S&P 500. That is because the cycle information contained in this chart is more bullish. And here you can see a possibility that the 40-day cycle trough will form at only about the level of the 20-day cycle FLD. Although, of course, it is too early for us to tell because the 20-day cycle FLD is only plotted into the future by half of the cycle wavelength, and so we need to allow a little more price action to unfold before we can determine whether that is going to happen. Nevertheless, for the Nasdaq, we have the same situation. Price is bouncing up out of a potential 20-day cycle trough. We are going to form another peak, and then of course price must come down and form a 40-day cycle trough over here at the end of November. Taking a quick look at gold, and again, I'm not going to spend time explaining the bigger picture, which was explained in the previous video that I made about gold. I will place a link to that somewhere on this video in YouTube. The important thing here, and what I would like to focus on, is again the interaction between price and the 20-day FLD. The important thing is that we have a trough over here of potentially 20-week magnitude that formed at the beginning of October. You can see that I have two analyses on this chart. I have a trough analysis at the foot of the chart and a peak analysis at the top of the chart. These are two separate analyses, as I mention every time I make a video about gold. And so whereas you can see a peak of the 20-week cycle formed over here in the last week of October, that is not necessarily the peak of the same 20-week cycle that formed a trough at the beginning of October. I'm sorry if that's a little complex, but I would encourage you to explore the idea of a dual analysis, which I mention in many of these videos about gold, and I have several videos that explain the concept in more detail. But let's focus on what the 20-day FLD is telling us in this case. Again, following a trough of at least 80-day magnitude, in this case a 20-week cycle trough, we had our A category interaction where price crossed up above the 20-day cycle FLD. It easily achieved its target, which was over here, and far exceeded it, indicating that there is bullishness in the price action of gold. Price was then expected to find support at the level of the 20-day FLD at the time that the 20-day cycle trough formed, which was over here on the 24th of October. Again, price formed that 20-day cycle trough above the level of the FLD, as you can see, revealing some bullishness in that market. Then an interesting thing happened, and this is why I find it very useful to watch a peak analysis in gold. You must remember that Hurst performed his initial research on the price actions of stocks in the US stock market, and he discovered that the cycles that influence those stocks are synchronized at their troughs. Many Hurst analysts today believe that precious metals are actually influenced by cycles that are synchronized at their peaks, as opposed to cycles that are synchronized at their troughs. That's why I think it's very important to keep an eye on a peak analysis in gold. And so when gold formed a 20-week cycle peak over here, at about the same time that the trough was forming in stock markets, interestingly enough, that caused a change in the nature of the price movement for gold. But returning our focus to the 20-day cycle FLD, you can see that price crossed down below the 20-day cycle FLD over here over the weekend of the 4th and 5th of November. Labeling our interactions between price and the FLD, that is a D category interaction, which I've already mentioned is what happens when price crosses down below the FLD on its way down to the 40-day cycle trough. Here is the nest of lows for the 40-day cycle trough, which you can see is now slightly overdue. There have been 38 days since the trough at the beginning of October. The average length of a 40-day cycle is 34 days, and so we are a few days overdue for this 40-day cycle trough to form. Price reached and exceeded the target to the downside, generated by price crossing down below the FLD, and the fact that it did that tells us that there is now some bearishness in this price action. Why is there bearishness in the price of gold? Simply because it is likely that a 20-week cycle peak has formed. Nevertheless, we are expecting a 40-day cycle trough to form, and then we are expecting price to cross up above the 20-day FLD in what we will label as an E category interaction. That could provide us with an opportunity to buy into gold. However, we must take into consideration the recent bearishness that has crept into this market. And if we take a look at the composite model line for gold, you can see that the cycle information contained in the analysis is not indicating that we are expecting very much bullish action. Here is the bounce out of the 40-day cycle trough that we are expecting. And in fact, the composite model line crosses above the 20-day FLD, but fails to reach its target as a result of that price cross, after which price is likely to turn down and head into this 80-day cycle trough expected in the beginning of December. Finally, let's take a look at Bitcoin. Here is the 40-week cycle trough that formed in early September. Here is the same 20-day cycle FLD that we've been looking at in our other analyses. You can see that here too I have two analyses on this chart, a trough analysis and a peak analysis. Is Bitcoin better identified with a trough analysis or with a peak analysis? That's an interesting question. In my experience, Bitcoin is an unusual instrument because it seems to respond to both analyses equally well, indicating that for some reason the cycles that are influencing the price movement of Bitcoin seem to be synchronized at their troughs, but also synchronized at their peaks, which is in fact impossible. However, I will let you explore that idea separately. The important thing in terms of this analysis is that you can see we have a nest of highs for the 40-week cycle peak. That is a big and impressive peak, and so price is moving up into that peak. It has not yet formed that peak, in my opinion, and so we can expect further bullish price action from Bitcoin. What about interactions with the 20-day FLD? You can see that price action has been so bullish ever since about the middle of October that price has not actually interacted with the 20-day FLD. The next interaction, according to the trough analysis, would be the F category interaction, because here we had a D category interaction as price came down into the 40-day cycle trough, and then an E category interaction as price bounced out of that 40-day cycle trough. The next one is, of course, F, as price comes down into this 80-day cycle trough. That is a bit of a scattered nest of lows, as you can see, for the 80-day cycle. And the fact that we have a 40-week cycle peak looming indicates, in my opinion, that the focus should really be on the peaks. And so rather than anticipating an F category short cross down below the 20-day cycle FLD on the way to the 80-day cycle trough, I am going to be focusing on the 40-week cycle peak that should be forming fairly soon, and when price crosses down below the 20-day FLD, that will be an indication, in my opinion, that that 40-week cycle peak has formed. Until that time, we are looking at price moving upwards into that 40-week cycle peak. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below this video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.